I would simply say that if you believe that the most sophisticated, well-funded, well-informed traders on the globe know what they are doing, then that should be a wake-up call to everyone who sees, hey, premiums, prices, availability have never been better, unless you think all of a sudden everything has been fixed. And I don't. And I think it says a lot about the recency bias and the normalcy bias that inflicts people's judgment these days. And quite frankly, this is when you should be buying, when premiums and prices are low, when availability is great, and when there are a million reasons to buy it.
Andy Schectman, the co-founder and CEO of Miles Franklin, believes that if we trust that the most knowledgeable and financially powerful entities in the world are making informed decisions, it should be a wake-up call for those observing the prices and availability of precious metals like gold and silver. These entities are moving large amounts of metal out of the market and into physical storage, which is a sign that they believe the prices of gold and silver will increase. Schectman emphasizes that the current favorable conditions for purchasing these metals, with low premiums, prices, and high availability, indicate that it's a good time to buy. Gold prices edged lower on Tuesday as the dollar regained some footing, with investors awaiting U.S. inflation numbers due this week for clarity on whether more rate hikes are on the table. Schectman believes that the prices of gold, silver, and other precious metals are being influenced by significant amounts of these metals being moved out of various global exchanges like the LBMA, Shanghai Gold Exchange, and COMEX, as well as ETFs. Large financial institutions are undertaking this coordinated effort to remove metal from the exchanges, betting on the price of gold and silver to go down. In addition to draining metal from the exchanges, Schectman highlights that authorized participants quietly remove substantial metals from ETFs, exchange-traded funds, like GLD and SLV. However, Schectman cautions that it is essential to understand where this metal is going and why it is being removed from these funds. We will now bring you clips from Andy Schectman's interview. But before we do, if you want more videos like this, ensure you smash the subscribe button and turn on the notifications bell for more videos. Thank you, and enjoy the video.
Well, yeah, I think it's important to clarify, at least my feeling is that the price is being betrayed by the continuing draining of all of the world's exchanges, whether you're talking the LBMA, the Shanghai Gold Exchange, the COMEX, or even the ETFs. You're seeing the biggest money in the world, which would be the most sophisticated money in the world. And that's important to understand, that draining these exchanges is anything but straightforward. It's anything but easy to do. And it takes an awful lot of sophistication, an awful lot of money and coordination when you're pulling this kind of money off of the exchanges. But it's not only that. You have the authorized participants that are very privately, very quietly, very methodically draining the ETFs. Last week alone, we saw 200,000 ounces come out of GLD. Now, where the hell is it going? Who's buying it? Why are they backdooring it out of GLD? Remember, we as the investor cannot take possession of the metal held in GLD or SLV. You have to take an extraordinarily large amount. I think the last time I saw it was $18 million, which was a basket of GLD last time I looked at it. But 1.5 million ounces of silver last week was taken out of SLV. And as Ted Butler talks about, not only, those amounts, there was much more in the other silver ETFs that was drained. But as he says, this looks much more like metal going to other parts of the world rather than just plain vanilla liquidations. So they use it because it's very opaque, just like they do the tremendous number of exchange for physical contracts that are written on COMEX and then delivered off the LBMA. What you are seeing is the biggest money in the world using the Western price suppression to run cover for draining the cupboards of all of the product. And it's happening at what's really interesting to me above all else, Mario, they talk a lot about the big money always being ahead of the trend, the big money front running, the big money always in position before the crowd or the herd or the little person catches on. And that's why so few people ever really succeed. And what I'm getting at is that, or succeed in investing, I should say. And what I'm getting at is that you look at the top, and there's no question that the biggest exchanges, the epicenters of metal across the globe, are being bled down. That's unequivocal. And you talk to guys like Ted Butler, they'll tell you there is a shortage of industrial size bars on the exchanges. What's interesting about that, and I would concur, I would agree, the bleed down is incredible. But here again, they're using the suppression of price and rhetoric to run cover for that. But at the same time, the retail market right now is as flush with product as I've seen in 4 years, is showing the lowest premiums I've seen in 4 years. And I to me, it's like a hurricane where we got our ass beat by the front end of the storm. And more people die in hurricanes after the front end comes and you're in the eye and they think everything's fine. They go out for a walk with their dog and bang, they get smacked by the trailing edge that wipes them out before they get home. And it's kind of what I think it feels like to me right now. Why the retail market is so flush with product and availability and the lowest premiums we've seen, and kind of apathy, if you will, all of a sudden with the retail investing public. Yet at the top end, you're seeing a continuing major bleed down of all of the supply, where all of the coin stock comes from is being bled dry methodically, precipitously, and it is not stopping. At some point that trickles down into the retail market.
Schectman emphasizes that the effectiveness of Western sanctions is diminishing over time. He points to the trend of countries, representing around 97% of global GDP, working on their own central bank digital currencies, CBDCs. This move aligns with the Bank of International Settlements, BIS requirement that all nations have a CBDC by 2025. Schectman sees this development as a precursor to the BRICS currency. The development of CBDCs by major economies will make it more difficult for Western countries to impose sanctions on other countries. Schectman speculates about a potential scenario where the global system shifts dramatically. He mentions Mike Adams's idea of Project Sandman, where multiple countries abandon the US dollar simultaneously. Although Schectman is uncertain about the truth behind this project, he suggests that a situation in which OPEC countries and other nations opt not to accept dollars for oil settlements could lead to a surge of inflation hitting the United States. This inflation wave could lead to a dire situation where the response might involve raising interest rates substantially. In Schectman's view, such a move could lead to currency devaluation and a collapse of various financial assets like stocks, bonds, and real estate. Let's get back to the interview.
You wonder how a country like Iran sidesteps sanctions. Alistair McLeod says that the Shanghai Cooperation Organization has plans to issue a gold-backed settlement currency for the Eurasian continent. Don't know if that's going to happen or not, but Iran could sell its oil to China or to any of these, and through this network, and get paid in yuan and converted into gold on the Shanghai Gold Exchange. The West's reach and the sanctions are proving to be less and less and less significant. And then you put into the fact that all of these countries are making their own central bank digital currency. In fact, what I just read was the countries that comprise close to 97% of global GDP have all begun issuing and working on and implementing and developing their own CBDC. It was the Bank of International Settlements that said everyone has to have one by 2025. This will be the way that the lead-in, if you will, into the BRICS currency. But the point I'm getting at is that China and the United Arab Emirates and one other country, I forgot who, maybe Singapore, guess it's irrelevant, they developed something called Project M Bridge, as in money, which allows these countries to trade their central bank digital currencies amongst one another and not using the SWIFT system. The pieces are being put into place militarily, financially, in terms of the way that they conduct business outside the SWIFT system. All of these things are being put into place, and all of these deals that are being put into place. If you don't see this, then you're not looking closely. And for our media to tell us they're surprised about it is no surprise to me. They're a bunch of morons, and everything they say is months after you and I have been talking about it, which is right in front of your face if you open your eyes and look. The only way to bring the whole system down is to collapse the whole system. When Klaus Schwab said you'll own nothing and you'll be happy, well, how do you do that? Well, Mike Adams talks about Project Sandman, where everyone dumps the dollar at once. 130 or 40 countries that have signed on to that. I don't know if it's true. If it is, it would fit very similar to what I believe will happen, and that is when all of these pieces are put into place, when everyone says, let's go, and Saudi Arabia and all of the OPEC countries who are on the Belt Road say, we're not taking dollars anymore. You're going green. We don't like what you're doing to the currency. We don't like what's been done to the bond market. We are going to issue a new or accept a new or a set of new currencies, whether it's the BRICS currency, whether it's the yuan, which they convert into gold on the Shanghai Gold Exchange, whatever it is, when they stop taking dollars as the sole settlement currency for oil. Remember that every country on the planet has had to accumulate them for 50 years to buy it. So what happens when they all dump it? It creates a tsunami of inflation that hits our shores. And the byproduct of that is what really Powell would want to do to stop inflation, but doesn't have the courage to do, and that is to spike interest rates high enough to really, really create a problem. Now, in this moment, maybe interest rates go much higher than what I'm talking about. Maybe they go to 20%. Well, how can you have 5% interest rates with 20% inflation? You can't. Your currency dies in days or hours. Instead, you have interest rates that rise to meet the inflation, which is it's the poison pill, because everything in this country is inversely correlated to that moment. They dump dollars. OPEC did it to us. Xi Jinping and Putin incentivize it. How could they do this to us after we protected them forever? How could they? And then everything collapses as interest rates go to the moon.
The prices of gold and silver will likely rise as large amounts of these metals are moved out of the market and into physical storage. This is a sign that investors believe these metals prices will go up. What could these strategic actions in the precious metals market suggest about the future prices of gold and silver? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.